Hello everyone. So today we'll dive into buyers and sellers. So we'll work directly on the chart, right? And this video is in direct link with the next video that's gonna come. So pay attention to every single detail. It's very important. Let's go. So I'm gonna share my screen and go. So I'm sharing my screen right now and we're on Euro USD MT5, and we're not gonna go into theory anytime soon. Now we talked about a lot of things, we saw a lot of things. Now you have kind of some kind of basis. If you had misconceptions about how to read a chart, now I think we dealt with it. And now let's rewind. If you have knowledge about trading, let's just forget about that part and let's just try to rebuilt in a good way what you know. And if you don't know anything, you're already on the right path. So what we have here is the chart of your USD on the 1 hour. Okay, we're on the 1 hour. That's okay because it's in the middle between intraday and swing trading. And this is basically, if I have to do intraday, I would basically use that chart to go into a top-down analysis and probably trade on the 15 minutes. And if I want to if I want to have a swing trade, and currently I'm into swing trading a lot because I have a lot of things to do and it's really, really, really time effective. So let's talk about buyers and sellers. Let's go back in time and we'll go like that, right? Okay. So when you see the price pushing to the upside, for example, here, you see the price pushing to the upside. Basically, what you're going to tell yourself is going to be, oh, there is a buyer, right? Then you'll see the price pushing to the downside. You're going to tell yourself, oh, that's a seller. It's pretty straightforward, right? But you want to be able to make the difference between when someone is buying, when someone is selling, and when someone is just getting out of its trades. So let's say, for example, it is, let me take a good example here, right? So here, for example, we are 21st July, it's 8. And then you have some kind of push. So these are buyers, right? You have buyers. And then until 4 p.m., right, you have buyers. So that whole day from 8 a.m. to 4 p.m., you had buyers, meaning people bought. So you had the opening, you had a push, a bullish push around the opening hours. And during the whole day, it kept pushing upward. What does that mean? You had a lot of buyers of euro or a lot of sellers of USD. Now, once we reach 4, you see that price hovering around and going a little bit to the downside. What does that mean? Well, that simply means after the close of the session, or after the close of London session, New York session, Tokyo session, or between these periods, you don't have really any activity. So what happens here? It's not the seller that came, it's simply traders that stopped pushing the price upwards. Okay? And when they stop pushing the price upwards, they have to basically, if they bought, they have to basically sell their trades to get out of them. So this is what happens. And sometimes you may see a push going really fast to the downside and you might think it's a bearish move, but if you have, for example, a volume indicator, you see no volume, that simply means that here you ain't got nobody trading, it's just people getting out of their trades. And here, because it's during the session, there's a lot of activity and people are interested in either buying or selling any of these two assets in this pair. Well, this is what's happening. So another example, you see that push here, and that push came around, so you had that first push probably around 8 a.m. that I see there, yep, and a big push around 10 a.m. And then you had this, right? After 6 p.m. So you want to be aware of what's going on in society, what's going on in the financial market, because that's going to allow you to understand. So let's say you wake up at 8 a.m. and you see a big push to the upside with volume. That might tell you, hey, that push has a reason. So you might continue and you might jump with that bullish move. And if you see, for example, a push to the downside after a push to the upside, after the close of a session, well, you might think you're not getting involved because this push has not necessarily have a meaning of somebody selling this particular asset. It's just that asset pulling back because people are getting out of their trades. So prices in the market are kind of sensitive to a certain extent. So the sensitivity of the price is based on the volume sensitivity. So let's say I have shares of a company and I bought 50% of the shares of this company. Which means that if I'm buying 50% at once, I'm pushing the price up very heavily, because compared to how many shares there is in this company, I have a lot of power, basically, in money terms, in ownership terms. And once I decide to sell these shares that I have, what's gonna happen? I'm taking my money out of the company. So the price will crash because of how much I own in the company. But let's say I only own 0.5% of that company. Whether I buy or sell the shares that I have, nothing will really happen. Okay, because I don't have a lot of power in terms of ownership. Then you see that price hovering around. And in the next video, we're going to talk exactly about where we can understand where the buyers is starting and when the sellers are starting, and inverse. So areas of interest are very important if you want to be able to take a trade smartly and understand the areas where you should take the trade and areas where you shouldn't take the trade. But let's understand this more. So here you might have buyers and sellers, but buyers and sellers are reaching a consensus price. What's a consensus price? Is basically when they start, they're satisfied basically with the value of that asset, and they start buying and selling around the same areas, right? So you see from 22nd of July to here, which is 28th of July, the price just went up and down. Really, it's a range. And people were basically satisfied with the price of Euro USD until they weren't anymore, and the price pushed to the downside really heavily and kept pushing and pushing and pushing until here. What does that tell us? That tells us we probably had a new information in the market without diving into the details, and it was kind of before 8, so it was pre-session, and you had that push to the downside, that heavy push to the downside. Now, because it was pre-session, you want to ask yourself, does this actually have meaning or not? Because there's no real activity in pre-session. And the session opens and you see that push keep going downwards. Well, it definitely has meaning. It even unable to pull back here. And it pushes down more and more and more and more and more and more. So this is a big seller. If you change time frames, and we're going to talk about time frames not in the next video but in the video after that, you'll understand Where does that come from and where does it come from? We always say that the highest time frame has the highest power. So the 1 hour has more power than the 15 minutes. The 4 hours has more power than the 1 hour. So the more you go down, the more you have noises, right? Okay. So you see that push, and then it's unable to go down anymore. You see the price hovering around, and you see that big push to the upside. People weren't satisfied by this price anymore, and then it kept pushing up. What's very important to understand, if we even go here, what's really important to understand is when the push has a meaning and when the push doesn't have a meaning. If the push has a meaning, you can basically make the assumption that there's an actual seller or buyer behind this push. If this push has no meaning, you want to be extra careful in taking the trade and riding that price. Here, for example, you want to ask yourself, hey, who pushed here? For example, you have that push, right? At this point, you want to ask yourself, okay, what made that push happen? Is this an actual buyer or is this just imagination of the market? So if you have, for example, what we talked about, if you have a news that happened, if you have a new information that's happened in the market, if it's around the opening, if it's around the news, if it's a highly traded asset, if it's during hours that there's a lot of activity and a lot of volatility in the market, and you see high volume coming into that, and you probably have access to the order book, and the order book is basically, we're going to talk about it, it's basically all the trades, buys and sells that are happening in which prices within the market. And if you have access to that, that's a lot of help with the chart footprints. So you have that push, you're asking yourself, okay, it began here, I'm having that push here, it kind of pulled back here, I want to take advantage of that in the 15 minutes, I go down in the 15 minutes, I buy, I make a small profit, and then the price crashes down. So even in this crash down, you would, if you're in the 15 minutes, basically you would see a downtrend. But here you only see a pullback because this guy started the move and never got breached, right? And same thing happened here. This got breached. Same thing. This reminds me of this, because you had a big push to the downside, big push to the upside, kept going up, and then you have kind of the same thing happening here. See, people are basically reaching a no-go. So let's say you have a buyer. Let's say you have a buyer here, and the buyer says, "Oh, the price is too high." So the seller pushes the price down, and the buyer is not satisfied, but that's the limit of the seller. And the seller is saying, hey, that's my limit. I ain't going any more lower than this. And the buyer says, okay, I'm going to buy a little bit. And when he buys, he says, okay, push the price a little bit more down, but this is the actual price of the seller and he's not going more down. But there is demand. So the buyer will be obliged to buy. And you'll see that push happening. Even though there's a lot more complicated things going behind it, you want to start slowly by understanding that this is not merely drawings, it's the actual movement of the price and there's a reason behind. So once you understand, okay, the buyers are in this area, the sellers are in this area, for example here, the buyers are in this area down here, the sellers are in this area up here. Well, you'll kind of understand if you're in this area, you're not supposed to be a buyer. And if you're in that lower area, you're not supposed, quote unquote, to be a seller. And if you are, it might be more risky. So you need more confirmations. For example, if you're up here, you got a history of the price being pushed to the downside. However, because this push has a big meaning and you saw that price not really reacting from these areas, you might be able to buy because there is a reason. If there is no reason and you're here and you don't see the price pushing up, you actually the price getting a bit rejected in these areas. Well, guess what? This is a seller's area, so you might ride with the sellers. Okay, but anyways, the trend is your friend, and this is an uptrend, so you want to keep riding with the trend. Okay, cool. So now we understand kind of buyers and sellers, what they're doing, what they are, why they are in the market, because they're interested in the actual price of the asset. And we're just here to write the price. So once we understand where are the buyers, where are the sellers, where are the orders, which will be a very important component of the next video, we can be safe and we can be more accurate in our trade placements. I'll see you on the next one.